Wednesday, November 13th, quick one-up video for you wonderful ladies and gentlemen. We had the CPI data today. It was in line with expectations, although month over month it was the same. The year over year from the last reading was slightly worse. I'd say the read is in line, but still I think a little hot because inflation is continuing higher, just at a slower pace generally, but still at a decent pace here. As far as the rate cut expectations, we went up to 83% for a 25 basis point rate cut from 58% the prior day. We were at 84.4 a month ago, so we've been bouncing around somewhere between 58% and 84%. As far as VIX goes, another new low on the range here. I would be on the lookout here for a higher low, and then if we were to get over 1526 high of day, I would say that this was like a massive reversal type of a situation. But until then, it just looks like lower, lower, lower here. I don't know if we're going to get down to the 10s, 11s, and maybe even 9s, but I do still like the idea of putting on protection here, particularly if you're longed up for a year-end rally. Put protection is cheap here. I was trying to look for premium to sell the last few days. There is nothing. Often when premium is too cheap to sell, it's just right to buy. I would rather be a premium buyer here, playing pure directional play. Even if you're playing for long, I prefer just owning calls or call spreads as opposed to selling puts or put spreads. And if you are doing that, smaller size for sure. As far as the ES and the NQ go, we are getting liquidation breaks and short squeezes all over the place. It just seems like the algos are running them up and down. Breadth today was mildly negative. The AD line kind of bled out all day, not really that impressive. Ticks look middling. Morning, a little bit of buying, but generally a distribution day again. I think the bulls need to get up over and stay up over 6,013.5, and I'm going to be a tougher grader and say we have to get over the prior two-day highs at 6,036.5. I think anything that gets below and stays below 59.90 quarter could see a larger liquidation break, possibly down to 59.74.5 and maybe 59.50.5. As far as Qs go, we are teetering right on this key neckline here. I've expanded what I view the neckline as slightly. It's 21,098 quarter to 21,121.75, where we're using the 21,121.75. But there was a little bit of play in there, so I'm willing to give it that range as opposed to just a hard number. To negate the bearish pattern, the bulls need to get over 21,237.75. And then if we were to lose the two-day low, I think it's just free fall. That would be below 21,054.75. I think we'd go right down to 20,902.75 and maybe even 20,767.5, which are the fib extensions respectively on both the ES and the NQ as those downside targets. As far as SPY goes, just looks like some consolidation here above the old rising wedge high. If there is a dip, the trend line and the rising wedge low is right at 592.51. If there was a larger liquidation break, we would probably pull back to the reference 1017 breakout at 586.12. And then we'd see that area is going to be very key because it lines up now with the 10 and likely the 20 MA by the time we get there, which is currently 583.83 and rising. I've told you I didn't think we were going to sail just through 600 or that 6,000 level. We could test above it, but I do think that that area is going to still attract sellers at least for a little while. And the more we can't clear it and the more inventory that builds up here, the larger probability starts to become of a liquidation break. As far as the Qs go, the money flow was not confirming the new highs. This does still to me look like a bit of a bull flag. If this was to check back just to the top side of the old up rising wedge high, that would roughly fill the gap from 11.6 to 505.12. The real key zone I need to see this hold is 501.35 to 503.52. If that can't hold, it'll probably see a larger liquidation break. My guess is the 20 MA would line up with that by the time it got there, so that would be still further key support. Currently 498.34 and rising. On the upside, the fib extensions would be 525.30 and 540.10. So if you're doing some kind of a call spread, that would be good upper strikes. With regard to SPY, we didn't talk about those upper fib extensions, but we have in prior videos. They are again 604.35, that's the 2x range, and 615.62, which is the 2.618. Apple, I said, was looking to me like just in a big consolidation range. I know a lot of people on TV are talking about head and shoulders. I mean, I guess I sort of see it, but I don't. what I view the 8-5 breakdown on earnings are and the subsequent few days as a look below range that failed. And we did get up and test above the higher end of the range at the 237.23, and then that sort of failed. So I view this as a situation where 232.92 to 237.23 is the higher end of the range, and then the lower end of the range is between 216.62 and 213.92 with a sub lower end of range there. I know we're getting a little complicated, but bear with me. 220.20 to 221.48. So if 220.20 to 221.48 holds, it's probably back up, I would think, to the 20 MA at the very least at 228.72, maybe even a retest of the 232.92. If the 220.20 fails, we're probably coming down to those 216s and 213s as we discussed. NVIDIA, I used the opening poppage today to book the remainder of the call spread that I didn't get the full fills on yesterday, and I got out at the same prices that I got out yesterday at the 315, which was nice. That, of course, was the 145-150 call spread that expires this week. If it was a little longer dated, I probably would roll the dice and let it run a little bit more, but given the fact that we have now 2 DTE, I didn't want to F around and find out. I would consider re-upping this if I wanted to roll out. They do have earnings next week, and we are sort of, I don't want to say the upper end of the channel, but we're not exactly middle channel, which I would view at this point as 140.76, which is, of course, the key breakout level over the 620 highs. If we were to pump up right to the yellow channel high tomorrow, you're looking at 154.40. If we did the green channel on some news, it would be 157.20. So I still like using those 155s, 160s as upper strikes on call spreads. We're probably too close at this point to the 150 to use, so it would have to be at least the 155 or 160. I would be on guard, though, if we can't hold 144.42. I think we'd come back to the 140.76, and then that is the absolute must hold, or probably coming back down to the 131s to 130s. So if you're doing some kind of a put spread as a hedge, 140, 130 to me looks good. Or I would prefer doing 140, 130, maybe 120, because 120 takes you to the green channel low, which would be the buy the dip, because it is still in an uptrend. Tesla, obviously getting jiggy from Elon Musk. We are still consolidating above the green channel high. If there is a liquidation break, we could come down to the 299s, 300 area, which should have probably been more resistance that wasn't, and ultimately maybe down to the 271.10, which is roughly mid-channel, maybe a little below mid-channel, but was the key breakout over the 711 high. So if you want to put on some kind of a hedge, 300, 270 to me is pretty good. And if you wanted to sell some upside calls, maybe longer dated, maybe get something up closer to the 400s. This app Lovin', which everyone seems to be loving, got the 2.618 and is consolidating up here at the 289.14. So I think this is a good opportunity to trim some gains here. I'd be careful if you got below the 263.26. That'd probably be a short. I think you could also use a partial stop at 277.32. I don't know that we're going to get the 4.236, but I had a few people ask, looking at 462.18. So if you want to pepper out some orders up there, I'm not so sure what would get you up there right now, but that would be it. So I do still like booking the 2.618 here, though, at 289.14 plus. Booking, which has just been unbelievably strong, consolidating above the yellow channel high. I mean, this really, believe it or not, is fine as long as it can hold over the Halloween high at 48.56.60, which would be a little bit below the 10 MA. If you want to hedge it, I mean, the 20 MA is a good lower end because that has been the sort of BTD level at 46.38 at this point. Booking to me is a tough chase here, but could it get the 2 times range here at 53.61.98? Very possible. And the 2.618 would be 6,036.71. Google, also known as the googliness, still consolidating around the green channel high. 182.22 is the 78.6. If that clears, we're probably seeing the 190s to 191s. If there were to be a liquidation break and we stalled here at the 78.6, the 61.8 is 174.74. It's a little bit below the 10 MA. I do think that any pullbacks to the 169 area are still BTD opportunities. If you want to hedge this out and you're long here, maybe buy 175, sell 165. Or if you want to do it a little bit with an overwrite, and again, smaller because we are low in terms of IV, it would be 175, 165, 155-ish, or 160, because that would line up with the green channel low. Well, the kids are talking about Bitcoin these days. Nasty little topping tail the prior session, potential secure high. It overshot the 2.618 at 90,297. I think you can use the low at 86,925 as the hold. If that breaks, we could see a liquidation break. Again, the fib extension to fib extension could come down to 81,450. And then if that were to fail, we probably could even test back to 74,415 to 79,407. That, of course, being the 314 reference high and the 10 MA. I don't necessarily know that the run in Bitcoin is over, but I do know that we are at a big fib extension and it is a good opportunity to trim gains here. Gold is having trouble, obviously, because the money is going into Bitcoin and the dollar is acting like it's on fire. Anything below 240.64 to me is vulnerable. There is a gap fill from the 9/11 close at 232.25. Depending on how long it got there, that could be the yellow channel high at between 232.25. If it did it tomorrow, 230.87. I think, though, that this, to me, looks like it's seeing some distribution, and you probably will need the dollar to cool off for that to get going. It's interesting, though, that Bitcoin is still going with gold as weak as it is, so maybe just be a little bit careful there. Dixie is up pretty strongly. It's over 106.517. Could be a stop now. If you want to give it a little more room, 106.465. I do think it's going to run into some resistance around 107.113 to 107.348, which of course were the 11.1 and 10.3 reference highs. This has just been unbelievably strong. I don't know how much further this is going to go in a straight line with at least some consolidation or pullback, but it is making big moves and it's run $6 in a pretty short period of time. TLT has been weak also. I do think that this area could find some support here around the 89.82, then 88.68, and maybe 87.34 if you want to start nibbling in this or selling some out of the money puts. I generally do think, though, for the Mo Bros, it needs to get over the 20 MA, which is 92.01 and falling. I actually did put on a tiny little trade on this today. It's going to be on a very tight leash, though, and I did it small. I did in January of 26, I shorted the 85 put, I bought the 80 put, and then I bought the 90 call and sold the 100 call. And it's actually a little bit of a loser because the IV pumped up at the close, but that'll be all right by the open. I do want to see it start rallying before I would add to it. I think ultimately this will probably check back to the 95 area at some point, but I don't know that it's not going to go lower first. With the kind of close we had today, if there's not a bounce right away, there could be that final washout situation, and I wanted to be liquid enough to benefit from that if it were to happen. Generally speaking, we have run a long way. You have interest rates going higher and you have the dollar going higher. Those are not good positive things for stocks. Multinationals are going to start feeling that too in their earnings. We've known in the past when Meta has missed earnings, they have cited a strong dollar. I still like using up opens to trim gains. Ivy is super cheap here. If you're super longed up, put on some hedges, buy puts or put spreads. You're not going to be paying a lot for them with the VIX where it is. And believe me, when the VIX is in the 20s, which it will ultimately be at some point, you don't want to be first adding in the protection there. You want to be selling it there as opposed to chasing it when the hurricane is already hitting. Like and follow for more.